in 1970. That's unbelievable.
I haven't used that year yet. Okay.
I've used 1970.
I don't know.
before.
I don't think so.
Neil Young released his third studio album after the gold rush. And I'm thinking about it. I actually heard the song coming to the show today. I'm not making this up. It's true. It happened. And I'm saying to myself, oh my God, over the last 48 hours, all I've heard about is this is the new gold rush. AI is the new gold rush. It's all happening right before our very eyes. Well, if you listen to the lyrics of Neil Young's song, strange things happen after the gold rush. By the way, you are listening to the On the Tape podcast. I am Guy Adami, Danny Moses, and Dan Nathan. In a few minutes, Cameron Dawson, CIO of New Edge Wealth, will be joining us. I believe this is her third time on the podcast. Looking forward to that conversation. But what are your thoughts about my Neil Young? By the way, love Neil Young from Canada. You cannot get Neil Young's work on the Spotify, unfortunately, Dan, because something happened. He got mad at somebody. I'm not really sure what happened. But that's neither here nor there.
Was that like the Joe Rogan? I think it was like the Joe Rogan stuff, and he just stuck it out.
I don't know.
Yeah. Do you know, like Neil Young, when he started playing with Crosby, Stills, and Nash, he was like 17 years old, wasn't he, or something like that?
I don't know his age.
I think he's.
But
like,
he really rounded out that group.
What are you kidding me? You don't start with an ode to Tina Turner, the queen of rock and roll. You walk in here with Neil Young. And I will say, I can't sing. I cannot imitate because no one can imitate Tina Turner. But
nor should you try.
I will say her song, "What's Love Got to Do with It?"
Yes.
I will say, "What's Price Got to do with it?"
That's what I'm talking about.
What's Price got to do with it? And here we are. Let's go right into it, Dan. So you weren't here last week. Congratulations on your Georgetown graduation and getting a raise, which I think that happens when you. That's not a cheap school.
None of them are.
Okay, and I'm assuming no scholarship. Maybe it was
no.
Okay,
You make the right assumption.
All right, so
there's no buy one get one free at Georgetown. It's not like Carvel on Wednesdays.
Exactly.
Wednesdays were Sundays at Carvel, but please.
Yeah. So we sit here. We talked last week. Dan and I had a conversation specifically about Nvidia, and I said to Dan, similar to Netflix, I never would be short Nvidia. I'm not dancing. I'm not long it, so I lose. I'm saying, because the macro is so strong, and I'm scared that they're going to talk about this AI. And good for them, they put up these numbers. Mm-hmm. The crazy thing is, like the piling in, and we'll talk to Cameron about it too. She'll have some thoughts on this. But the incremental valuation of the company. I say this all the time. Like, so if it was a $200 or $300 stock and it went to $400 or $500 versus being a $750, I don't forget about the price. Let's talk about valuation. Mm-hmm. A $200 to $300 stock. Sorry, let me rephrase that. If it goes from a $300 billion valuation to 500 versus a 750 to a 950 billion valuation. What are we talking about here? And I'm not saying I go out in short, but I will say this. We've been drawing comparisons to various investment eras. This solidifies for me, and AI is here to stay, and it's great. And the internet was here to stay in 90, 99, 2000. But I specifically remember, and I will never compare Lucent and Nortel to Microsoft and any of these other companies, because those are real companies. Lucent and Nortel had debt on the balance sheet, all this stuff. But this whole fiber optic craze related to the internet build-out, related to broadband, related to hosting, web hosting, all this stuff that went on, the macro was always right. It was the micro and how you added up these valuations of the company journal that made no sense. So yes, there's chip demand for AI. Mm-hmm. Is it going to be permanently $11 billion a quarter for Nvidia? They got this incremental $4 billion from what people thought for the second quarter. Good for them, right? They should get they should get credit for that. But at some point, right? The big guys are ordering chips. They're going into the data centers. They're building up the stuff. It'll moderate. And then the reality will be, not for today, probably not for tomorrow, not for next week. Hold on. A lot of those companies, I'm not saying these companies are going to go bankrupt. What I'm saying is, I remember a report that if you took all the fiber optic cable that was being talked about at the time, and it would wrap around the earth 10 times. Okay? that was kind of the denominator, so to speak, of this thing. So anyway, with that, it is what it is, and here we sit.
But it's a great point, Danny, and I'll just say this. So think about how this is it's hit these chip makers, the demand, it's hit the markets as far as valuations, okay? So you tell me if Nvidia is the only one with this H100 and it has the ability
so many
to
cool
ramp
names
up
for the chips.
But like, think about this, okay? Like, what percent of that guidance that they just gave is double orders? for
gonna
the
find out.
balance of the year. I mean, like, it's actually kind of dangerous. So when you think about it, here's a company that was doing, let's say, on average last year, $6.5 billion in revenue a quarter. Now they have this new, and there are parts of their business that are moderating. Okay, so now it's data center. It's this advanced chip that they have that everybody wants, and they're, let's say, double, triple ordering. So at some point, 30% EPS growth and 30% earnings growth, okay? So that's been ratcheted up here. But the stock right now, gaining $200 billion in market cap, is trading at the same valuation it was yesterday, now with these increases built into it. So what have they pulled forward? I mean, listen, I have been short. Now I've been doing it through puts, okay? And so good money after bad here. And so this is a bit of a trade, okay? And it's not going particularly well, but I just don't know how you can pile into this narrative right now, given everything that we know about the economy here, the slowing, what seems to be slowing, if you're just looking at the Shanghai Composite, what's going on in China right now, okay? Like, so to me, I just don't, it doesn't seem like a good
I don't think, I would say my pushback on that would be, this isn't about the economy. This is a blossoming area, right? It's a secular growth area. So to be fair, but I think you make a great point. I'm now going to look at Taiwan Semi for what they're looking at, right, with their buildup, because obviously that's where these, the chips are coming from Nvidia. So that stock's obviously up today, and it should be because we know demand.
12%.
But keep an eye on what they're saying, because if they don't say, oh, we're shifting, and to Dan's point, I think it's a good one. My thing is on a $4 billion guide higher in revenue, you put a 50 multiple on that increase, right? In terms of you gave it to them. I'm not saying the stock's going to go down tomorrow, but people, if you're chasing here in the name because you feel like I knew it, I'm going to get into it now, I'm buying it. That's not a good move. Could it go up another $100? Sure. Is it going to go to a trillion?
Let's do that math, because that's really important. $4 billion in the quarter, so expectations were 7, and the stock was trading 25 times.
I'm talking about the guidance.
I know, but that's what I'm saying for the guidance. So it was trading at 25 times sales. The stock's just gained $200 billion in market cap, and you already thought 25 times sales didn't make a whole heck of a lot of sense.
And listen, you want to give them now $40 billion run rate for the year ish. I mean, we can play the game if you want.
Yep.
At $1 billion, here you go. I mean, you're 25 times or so. So you can make the math look like whatever you want to look like.
$1 trillion, yeah. So
$1
here we
trillion.
are.
But you could. But to be fair, if you want to start using the end of the year run rate on earnings, you could see a $10 run if you thought that these orders were going to continue. So let's do that. Let's say $10. Okay, so it's almost at 40 times earnings. Okay, that doesn't seem crazy, right?
Yeah.
But this is going to be cyclical at some point. But right now it's secular. So I think it's a stay away for me personally. But what I would tell retail is, and we're going to get into this, Cameron, we're going to talk about this, there's a lot of other stocks which have a risk-reward profile, which are very different. And you can play the AI craze, like we just talked about, in Taiwan Semi or something, at a much cheaper way to play it. So.
Yeah, but one last point. So today, in sympathy, Microsoft, who is a buyer of these chips, okay, is up 4%. Google, which is a buyer of these chips, is up 2%. And I think it's important. These are expensive chips. They're expensive build-outs, these data centers. The cost of compute for like the new services that they're going to be providing, okay, across their platforms is more expensive. There's no guarantee that this transforms Microsoft and Google's earnings picture anytime soon. So you're pulling forward this across the entire trade at a time where these are the only stocks in the entire U.S. stock market that are really working.
What incentive does Nvidia have to give unrealistic guidance? I'm playing devil's advocate.
Yeah.
They don't need to raise capital, right? Maybe you'll see some insider sell. I don't know that. I'm saying there's no deal coming, right? So if they set themselves up for a credibility problem, which I'm not saying that they are or not, not being completely. It's just interesting.
I don't know. I'll tell you this: if you listen to the call, which I know you do, you listen to all these. The enthusiasm coming out of their calls specifically, it's things that I quite frankly haven't heard from any of these. I truly believe they think they're at the forefront of something special, and apparently they are. I think part of the problem is when there is something special out there, everybody runs to that. So the moat that they have. Somebody said last night on Fast Money, it's 90% they have of the market. That's going to, by definition, will dwindle. More competition will come into the space. So maybe their moat is wide and deep now. that will diminish over time.
AMD is up 10% today. It's up 50% from its lows this month. It gapped down 9% after its Q1 earnings, given the results and guidance that they had. So investors are going everywhere that they can, except one place. So I'm going to leave that one for you.
Intel.
It is Intel. But it's interesting. It's gained 50%. Like, think about that.
After their report, AMD went from, I think, 90-ish down to 81 and change. And that report wasn't particularly good. The lifeline came in the form of that partnership with Microsoft, if you recall.
Well, and so Microsoft, who's been ordering from Nvidia, right? So think about this. All of a sudden, they said, "Hey, listen, we need a second supplier here. We need AMD." So they, whatever the joint venture that they're going to do in support, and they're probably guaranteeing a certain amount of orders, which makes you think, though, at some point, a lot of these Nvidia orders that might be priced out into the end of this year, they might go away, right? Because if AMD is this a good second source, that sort of thing. So listen, again, I wouldn't buy it with your money, okay? I wouldn't buy it with my worst enemy's money right here. Is it going to tick $1 trillion? Probably. Yeah, it's going to ring a bell up there or something like that. We've never had a semiconductor company trade with $1 trillion market cap, trade at 25 times sales. You know what I mean? So unless they are doing something that is totally different than has ever been accomplished in the 70, 80-year history of the semiconductor business, I don't know, man. It's
a great company. And, I think Scott McNealy from Sun Microsystems back in it 23, 24 years ago, I mean, there was a huge valuation put on the back of that stock. And I think he tried to explain to investors how the math just didn't line up in terms of what the expectations were. And at a certain point, math does matter. But it's a great story. It's a great company. But the excitement around chips, AI, this sector, I think is masking some of the bigger problems. Earlier this week, you heard Jamie Dimon say, get ready for 6 or 7% rates for the foreseeable future. Danny, you talk about this all the time. Short-term rates are telling a really ominous story. Now, the S&P is still 41.55. This is the same level it was, I want to say, this time or early April. So, yes, we've gone up. We've gone down. We get right back where we started from. Bulls are getting chopped up. I think bears are getting chopped up without question. How does it resolve itself? I think valuations matter, and I do think the economy is slowing, and I do think rates are going to stay higher for longer. And you have seen a pretty significant move higher in both 2-year and 10-year rates. And, oh, by the way, that 2s10s yield curve, which I think got down to about 40 basis points, that seems to be widening as well. So all these things to be concerned about are still there. They have not gone away. They have not abated.
The last thing you just said is the most important. I was actually looking at that. We're back to 70 basis points, I think, on the 210, because the inherent view is that if the 2-year keeps going up, it's going to slow things down. That we know. So is it good? So you just said it's ominous. I would look at it a different way. It leads to bad things, but it's not ominous because people believe there's a potential for a soft landing. Now, we know there's tons of macro funds which are, going long and short rates literally on a daily basis, trying to time this debt ceiling issue, right? Trying to time what the Fed's going to do. And all that matters is that the market has been trading, ex-Nvidia, for a second, completely on Fed fund futures, 1,000%. We were at 25% chance of a hike in June a week ago, even 4 days ago. We're now at 50-50 of what's going to happen in June. The rate cuts keep getting pushed out. What's going to happen? That's fine if you believe that we are going to have a soft landing. But do not extract a name like Nvidia, which is in a secular growth area, to the market. Because what Jamie Dimon said at the annual meeting, right, was it's kind of the hard assets, real tangible assets are probably overvalued. Look what PacWest just did. I'll bring it up right now. So no one paid attention. They sold $2.6 billion worth of construction loans for $2.4 billion to a company, Kennedy Wilson. Ironically, Kennedy Wilson it's a $2.2 billion company. At one point was Vinnie Porter and I at Seawolf was one of our largest holders. It's a great company, right? It's a multifamily real estate. They have all the stuff all over, mainly West Coast. Stock hasn't done particularly well. But we talked about a few weeks ago that, Blackstone getting involved, that the non-banks would start to rescue the banks, and it's actually happening. My point is that, Jamie Dimon's point is that there's so many of those assets that are out there that are the real economy stuff that's actually happening. And I feel like the Nvidias of the world, and good on them, are masking this or giving people a false sense of not hope, but a security that the market's fine. That's not the economy. It's a secular growth area for sure. And so, again,
you know what? This could be a time capsule to January 2000. I mean,
No,
this conversation.
100%.
Right. I mean, like, think about that, right?
Yeah, it's not being, again, it's Vinny will laugh, wherever. It's not about being bearish. It's being it's trying to be a realist and understand that, and that's fine. This could go on for a little bit longer, and the market's higher than I thought it
So
would
you
be.
keep bringing up our "What are we doing, pals"? When are they going to come back?
We're coming
on
back.
here? Because we got to do that, right?
Yeah,
I
they'll be
think
on in
Vinny,
the next
Porter,
week or
Well,
so.
I'd love to see
tweet
the
at
guys.
those guys, please.
Yeah,
Okay,
yeah,
Tweet at them.
No, but not
I
you.
just
Like
call.
the-
I have
the-
their
the
number. I have their digits.
The
I can text.
listeners, let's
I'll
get
do
them
it.
all geeked
Yeah.
up. That's
Sorry
what I
about that.
mean.
The
here.
listeners should tweet at them.
Because one of the things I'll just say, like when you think about some of the areas that we think are most reflective of maybe how the economy's doing, and energy and resource, they're not trading well. I mean, they're just not trading well. And then, Guy, you spent some time after we saw Procter's earnings and Coke and Pepsi talking about some of these staples, and just there's no organic growth. It's pricing power,
Which is going away, by the way.
well, did you see how the consumer staple stocks have dropped like a lug in the last week and a half or so?
Look at Walmart, right? And I say it's priced to perfect. Stock's kind of languished here. The stock's expensive, right? But they told you what's happening. Sorry, Dan, to cut you off. In the real economy, it's happening. You can't hide. I mean, you can hide in Walmart. It's fine, but it's expensive. So that's a name that's a staple name, right? Period. End of story. Pays a dividend, buys back stock. It's fine. But if that's what's telling me what's going on in the economy, Dan, to your point, how do I kind of extrapolate? And then hold on, throw in the Saudi oil minister basically warning short
ouchies.
Warning.
He said they're going to have ouchies
right,
or
they're gonna
something
have
like that.
Right, exactly. Warning you, don't do it. Don't go short oil because
They're coming. And
Exactly.
that's, I think, I don't know exactly. Please don't at me. I think the OPEC meeting is either next week or the week after. It's coming to a theater near you. And they're going to ram it up our collective asses without question. So, yes, crude oil has gone nowhere, but I think crude's about to get back on its horse. We'll see what that means for energy stocks. But to your point, Dan, they haven't traded particularly well either. And some of these commodities we don't talk about, steel, copper, iron ore, all these different things.
That's exactly right.
Getting whacked.
Right. If this was really a soft landing, really being priced, it was really all those things would be acting better. And they're not, because we know what's coming. We know the lag effect. We know the Fed's not cutting in June. We know the Fed's not cutting in July. Could it happen in September? I don't know. But when we start to trade at 19 times, that's a credit conditions loosening. That's the market conditions that they look at it. The Fed, and listen, we ended Q1 on the earnings, and they dropped less than 4% versus what people thought could be around 8%. Great. Second quarter, I don't know. Back end, it's going to be really back end loaded as far as getting to this $220 number that's kind of out there. But I'm focused on now, and we'll talk to Cameron about this again, and you guys should really listen, is the 2024 number, because 3 months from now, we're going to start to roll into 2024.
So, Danny, going back to Jamie Dimon starting out the week when he said get prepared, he said, like, he literally said this, I'm telling people here at my bank, I'm telling other banks, be prepared for 6, 7. So what does that mean for these held to maturity assets that some of these regionals still own here, right? Because when we had yields come in, right, we had the 210 spread, kind of flatten a bit here, and now it's widening back out. That's not good. Like, are we going to see a rehash of what we saw in February and March in these regionals, especially, again, and we just talked about this, CME FedWatch, is suggesting a 50-50 chance of a raise at the June meeting in a few weeks here, and it's starting to price one even in July. So, like, are we going to have another inning of this little banking crisis that we had in March?
I think we talked about this. It's been a month. I think that the flight of deposits per se is kind of, I think we're kind of past that, because I do believe there's an implied guarantee from the government that can happen. Now, within that, to your point, can you offload these assets? I just mentioned PacWest.
But they have to offload them at losses.
Correct. They just offloaded it for $2.6 billion, for $2.4 billion, and there's another $350 million that's going to come after that. They're lining up liquidity. I think that's a smart, prudent thing to do. To your point, as rates move back higher again, we're seeing defaults in commercial real estate by the day, right? We're seeing these things, and banks are changing their underwriting standards. That's been going on in real time, and so you can see how the bank indexes are performing. I mean, look at the XLF, right? It's just dead money. These are utility stocks.
So there's also a headline today that I saw was really interesting, Guy. That so First Republic was obviously bought by J.P. Morgan, and we know that J.P. Morgan did not have an interest in SVB's business. That's why they didn't bid for it, really. Okay. And then First Republic, it seems like they were kind of forced to buy it. And the headline today was that their bankers are now going through all these personal loans. This was how First Republic got all those deposits, right? And so they're gonna shut those down.
100%.
So think about it. What does that mean for consumer spending? What does it mean for like you know what I mean? Like,
takes time, and we've talked about this for a while. I mean, regardless of where interest rates go now, I don't even think it's about the Fed. Danny, you talk about this for a few weeks now. The Fed's a bit of a sideshow. Now it's about credit and the tightening of credit and what it means to the consumer, what it means to small business, and then subsequently what's it mean to the stock market. Again, these things don't happen today, next week, but over the course of time, it's going to filter through the system without question. And it's fascinating because we've talked about this on the bullish side of it. We're not always bearish, by the way. I look up today and I see Toll Brothers, all-time high. Pulte Homes, all-time high. I mean, that doesn't sound, I mean, that's counter to what we're saying. But in terms of the Fed's job, I mean, it seems like conditions are as loose as they've been. So you have so many cross currents going on. My point is the Fed might be done. Rates aren't going lower anytime soon. And we have not felt the full impact of a 500 basis points of hikes in the course of 13 or 14 months.
Yeah, and I think we're kind of here in real time. And I think, again, put on your bullish hat for a minute and talk about the fact that first quarter earnings weren't as bad as expected, right? The Fed could be done. Let's just say that they're done. But let's not forget about this $8.6 trillion balance sheet, which is still sitting out there. Let's not forget about the liquidity, which the Treasury basically has been putting into the market as they're grappling with this debt ceiling issue, right? And when this debt ceiling issue finally abates, which hopefully is in the next few days, could get pushed to September or not, what's going to happen? That's going to roil the markets. You talk about rates. I think that's part of the anticipation. The rates moving higher is they're going to issue a lot of treasuries coming to the market because they need to fund the government, and that's been on hold for now. So that's sucking liquidity basically out of the market. And as rates move higher again, Guy, on a risk-adjusted basis, and I look at bonds versus stocks or risk-free return versus potential return from stocks, to me, it's a no-brainer. Now, there's value stocks being left for dead right now, which are not participating. Those are buys, right? You know, they I don't have a list of them in front of me.
I tried buying one a couple weeks ago,
that work out
PayPal
for you?
after results, and it was not particularly good. It's making new 52-week lows. I mean, like, so the stuff, I'm literally short the stuff that is literally up 25%, skipping $100 billion in market cap, you know, at a clip here. And then I try to buy things. We talked about, I think, PayPal after its results. There's pressure on margins, you know, some transaction volume slowing down, this, that, or whatever. But look at today. Square, PayPal, Bill.com, they're making new 52-week lows. They can't, like literally people are tripping each over to sell them. I puked it out. I try to trade with limits. I either trade with limits when I do it with stocks, or I define my risk as I did with Nvidia with puts. But it doesn't feel particularly good to have one thing going one way, one going the other. And what do you want from me, Guy?
Do you play poker, Danny?
Oh, I do.
You do.
Yeah.
So you'll be at a table, and every once in a while you're the person that has to answer big blind, little blind, small blind, whatever blind.
Yeah.
You got to put your chips in.
I got it.
You know what I'm saying?
Yeah.
But sometimes you're just not getting cards. You feel good.
You get impatient. Yeah.
But then what do you do when you get? Sometimes you just got to get up from the table.
Yep.
Your chips are still there, so. Somebody might put the blind in for you. You got to go. You got to put like water on your face, right?
Correct. Yep.
You got to clean yourself up, like James Bond in one of those movies. He goes to the bathroom,
Casino Royale.
cleans his shit up, and then he comes back.
Well,
he's
he gets
ready to go.
poisoned and didn't have to save his own life. But yeah,
noted.
I got you. Yeah.
He goes in,
Yeah.
he gives himself an injection,
Yeah.
but he comes back looking good.
Yep.
But he was getting his ass kicked prior.
Correct.
I'm getting my ass. I think we're all
He ended up getting a straight flush, by the way. But go ahead.
Well, okay.
Okay.
Yeah.
In that
But
movie, though, he got more than his ass kicked.
Yeah. He did.
Is it
Remember that
time?
scene with the
I do.
chair?
Of course.
Oh, that
and the
hurt.
knot.
Is that,
the
is that
knot in the
Nvidia chair?
chair.
Is that an Nvidia chair?
That might be the Nvidia chair.
God.
That put him that messed him up for a while.
All right, where are you
No
going with
kids,
this?
no
Go back
kids.
to your poker
Is
reference.
this the point where
Am I playing with 2-7 offsuit in this market?
Are we
Yes.
getting
What-
are we getting up from the table? Are we dousing our faces with some water, and are we coming back ready to go? Because second half is upon. We're gonna wake up next week. It's the second half of the year. It's June, baby.
There's been several times where I felt like.
So you're feeling
Hold
this
on.
way.
There's been several times in this market where I felt I had pocket jacks,
Right.
maybe queens, not kings or aces,
No,
but
pocket
jacks
jacks.
or queens, where I felt in the flop had a king come out
Yeah,
on it,
and then you know
but I
you're
still
dead.
felt like, I got this thing, right? Let me go buy some S&P puts, and it wasn't.
Yeah.
It wasn't. Some guy had, and the river was a 2, and he had 2 king, and he had a full house, and I got screwed, and the whole thing.
Did you just
couldn't
turn
see it
this
coming.
into this douchey all-in podcast?
No,
Those guys.
no.
They wouldn't.
No,
By the
I
way,
think you
I will
did.
take
Not
them
doing
on in a
that.
poker game. All those guys. That's fine.
I don't even know those.
But
guys.
and let me tell you a story about it. I played in the World Series of Poker
No,
years
you
ago.
did not.
Yes, talk about being impatient. So I make it through day one.
You got
I'm
through day
actually-
one?
Hold on, I'm chip leader at the table.
Stop
not
it.
at the table, not at the thing.
How many times did you do
Your
this?
chip leader
Go to
at
day
the
2.
table.
Go what? Go to day 2. Hold on. Go to day 2. And, at this point, I'm 42, 43 years old, so I have responsibilities.
years
'Cause
ago.
The reason the young people win the World Series of Poker is they can be out there for 2 weeks. They're 23 years old. They have no other responsibilities what they do.
And they're good poker players.
And they're good poker players, but they're patient and whatever. They do that for a living. I did it as a tourist. I mean, I paid the money to enter.
10 grand.
I didn't qualify. Oh yeah, you know what it is. Anyway, so I'm there. I'm enjoying myself. Whatever. So my wife was there with our friends for
By
the
way,
first 3 days.
Your wife's nuts.
Let me tell you how
I
this
say
works.
that
Let me
lovingly.
tell you how this works. For amateurs that sign up, that don't get the bid, that aren't the famous poker players, whatever, you play basically on a Friday for day 1, and your day 2 is on a Monday or a Tuesday. Okay, so you're there for 3 days. I got destroyed in the casino in the off days of the poker. Okay, so it was a horrible. Anyway, I'm at the table. I'm halfway through day 2. I got a pretty good chunk at my table. Like I'm probably second, at the table with chips, 100-something thousand of fake chip money, whatever. So I'm playing against this German champ, and I can't remember his name. I got to go back and look. I don't know where he ended up from here. Anyway,
Franz.
Funny enough, I had king, queen, whatever I had. I'm sitting at the table. My wife texts me that my kid was just thrown out of summer camp. Okay, and I'm thinking to myself, I'm here. I've been here 5 days already. Get me out of this place. And I made a wrong bet. I made the impatient bet. I went all in. The German looked at me like, "You come to me." He knew what. Not that he knew my kid got kicked out, but he was waiting for me the whole time. Gone on the plane, changed my flight. Get me the hell out of there. So anyway,
you do get impatient.
I've had the impatient. But back to your, and I think it's actually a pretty decent analogy. And I feel like right now people are catching a river card, so to speak, and they're getting bailed out by this Nvidia. They caught the flush on the river, so to speak. That's fine. So it's a long game. You got to be patient, to your point, Guy. You got to take your shots when they're kind of there. And I think the cards will come into view here soon. But
sometimes you have to put cold water on your face just to sort of you have to recalibrate. I
just broke a pen. I got upset about.
And I love that you were king, queen, probably offsuit. You're like, F it. I'm going all in right here.
Yeah.
Why not?
Why not?
And
exactly.
you might have won the World Series of poker.
I chose poorly.
You chose poorly.
New Indiana Jones movie coming out, by the way.
I heard about that.
Yeah, that'll be good.
By the way, Harrison Ford, he's got to be 80-something years old.
81.
Amazing.
Callista Flock is still married to Callista Flock.
By the way, I've much enjoyed. This is much more enjoyable than talking about what's going on in the market, to be honest with you. But let's go back here.
No,
to
we
the
are
market
talking
and what's
about
a real
the market.
bummer with the Tina Turner that we came in. When Vinny and Porter were on a few weeks ago, I think we used Thunderdome.
We did. That was my
one man leaves,
exactly.
And that would have been a good
What
one.
does that
for
got to
this.
do with Tina Turner?
What do you mean? She was the
oh my God,
Thunderdome.
Return
What are you
to Thunderdome.
talking
Mad
She was an
Max.
actress?
Mad
Yes.
Max. She was the
She
queen.
Tina Turner.
Yeah,
great.
she did. She did.
I didn't see. I didn't.
R.I.P.
I
Tina
don't
Turner.
like those movies. Now let me ask you this, Danny Moses. We didn't even talk about. If we talked about the debt ceiling and I wasn't paying attention, I apologize. But that is still out there, and apparently all these cats are going on some sort of break. So as of this taping, it's fair to say nothing's been
The
accomplished.
Nvidia chip will solve it because artificial
NVIDIA chip
intelligence is what's going to get us through.
You say that half in jest. I mean, that's coming to a theater near
Kathy
you.
Wood sold all her Nvidia in January. I mean, is that insane? I mean, of all the things to sell, of all the nonsense she talks about, that was the one. That was the nonsense that actually happened. That was the one.
She sold her Nvidia in January.
All of it.
Yeah.
Anyway, you can't make it up.
I mean, she's playing pocket twos there.
So we actually have a little. So we have Cameron coming on.
Cameron Dawson.
After this, we have a great
New
conversation.
Edge Wealth.
We also have. I think some of our listeners have heard us kind of make fun of. We have Stephen Rafis, who's on our team here at Risk Versa Media.
know
He's
Stephen
also on the
Rafis.
PLL Cannons. That is the Premier Lacrosse League.
They just dropped some info about
Some
the
big news, yeah.
Each team now has a city associated
Well, they
with
haven't.
it.
They haven't chosen the cities yet.
They have
with them,
not
but they're
chosen
gonna,
the
They're going to
cities
do
yet.
that. Paul Rabel, who's the founder of the league, president of the league, is going to be on Fast Money tonight with us. That would be Thursday as we're recording. But we also, Guy and I sat down.
Sure we did.
With the aforementioned Stephen Rafis. We had a little preview of the Division I lacrosse Final Four that's taking place this weekend in Philadelphia. And we're going to just run a few minutes of that clip. And then if you want to watch the whole video of it. We did a video. It's going to be on our Risk Versa Media YouTube page.
We have our own YouTube page. Subscribe to that.
Yeah, and smash the
shit out of the like button.
Yeah. So stick around for our conversation with Stephen Rafis, preview Division I lacrosse tournament this weekend, Final Four, and then also he gives us a preview of the PLL season. He's going to what do they call it, training camp or something like that?
They'll go to Albany, New York, I believe.
That's right, and then the league, it starts
all the
after
players
that.
together.
Yeah.
So like in a bubble.
We had a great convo with him.
I like Stephen.
Right,
I've
so
always liked Stephen.
Stick around for that.
So stick around for that, and stick around for this because I got a question for Danny Moses. Are you surprised that gold has not traded better, given everything that's going on? Given the way rates have moved, given all this unrest politically, some of the noise we're hearing. I mean, we didn't even talk about China, China, Micron, Nvidia talking about the potential upheaval that would happen if we had this trade war. All these different things nobody seems to care about. Gold market is sold off. I wouldn't say significantly, but it's pulled back a little bit.
Yeah,
here.
we talked last week. I think any pullback is a buying opportunity, and I think we're sitting at 1940 or 1950 here. We got as high as 2050, 2060, so it's off roughly $100 here, and it's obvious why it's down. It's down because the soft landing may happen, and the Fed's not going to be cutting. And literally, Fed Fund futures lined up with gold. You can see it, but I want to go back to the comment that Dan made about Square and PayPal. And I talk about this all the time about institutional positioning, specifically long-only mutual fund positioning. And they have to make a choice in their technology allocation, if they want to overweight technology or underweight it, and then what names to own. And for better or for worse, Square and PayPal fall into the tech space, right? Certain names like Visa go into both tech and fins and whatever, but for the most part, so I can have my tech exposure and not get crushed. The reason that they're down today is they have to now sell those and buy Nvidia. They have to now sell those and buy Microsoft. And this has been part of this thing. And you will get opportunities, people out there in these names like PayPal. I don't know about Square as much, PayPal. And so to me, I think people have to understand that dynamic of what's going on in the marketplace and how truly powerful that is. Those things don't correct in a day sometimes, right? This takes a few days. So telling and now, and so I think that we're going to see this. Normally these things like this today, Nvidia, they last more than a day. Yeah. They create a trend in the market for 3 days. I want to go into, sorry.
No, continue.
No, that's it. I just think it's to truly understand that, but here lies in the opportunity. Now's the time to be probably selling Nvidia and buying PayPal, to be honest with you, for safety.
Let's talk about that real quick, because Nvidia today being Thursday, I want to emphasize that, is going to trade about somewhere between 165 and 180 million shares of volume. That's about 4 times normal volume. You'll have a gap higher open. You can see it on the chart. So for you armchair technicians out there, you might want to start looking at this. To your point, Danny, and Dan, you mentioned this a number of times. There was no short interest of any significance whatsoever in Nvidia. So it's not like this move is people covering shorts. It's what Danny's saying. This move is people racing into a stock, a great company, but we believe to be an overvalued company. Now, saying that, I've thought that for a while. But technically, if you play this game, I mean, this is one side. This is one part of a 2-part series, the famed Gap Island reversal. So if this were to come in gap lower next week, for whatever reason, buckle up, people, because this thing could get interesting in a hurry. And all the people that piled in and got out of all those other names, energy, staples, healthcare, are going to have to get...
Well, retail. Have you guys seen...
Retail.
Nike has sold off 15% in sympathy with Foot Locker, okay? This is in the last few weeks or so, and that's just from the highs in May. So, buckle up, man. Literally, I think that the next trade... as far as the market's concerned, is okay, let's say we get some deal in the debt ceiling in the next week.
Yes.
Okay, let's see where the S&P can get to, because it's got to be other stocks than the ones that are raging today off the, in sympathy with Nvidia that do that. And if we open up above 4,200 and we can't hold, then watch out. Then sell in May and go away might be in effect here. So that to me is the real, is the real story.
But there's also, when you look at Abercrombie and Fitch and American Eagle side by side, right? One had a good quarter, one had a bad quarter. Stock was rewarded and punished, like they should be, kind of respectfully. That gives me hope. But you can't meme those stocks. You can't. There's no AI there, right? There's no kind of things. And so the stuff under the surface, there's real work being done, I believe, in the markets, Dan, outside of these top names. And the top, I don't know what the percentage now is for what these top 7, 8 names mean to the market from here. I mean, it gets more bifurcated every single day as far as the breadth is getting worse and worse. And so it's not, and to the point, and we're gonna talk to Cameron again about it, is what are the buy points what's the buy point on Nvidia if it drops back to $250? Is that where you buy it? Because why? Because it's trading at, that's the scary part of the unwind when things trade on momentum. I'm not going to stand in the way of it right now, let it go where it's going to go. And last week we talked about, I'd rather short it down 10, 15% than short it there, which, by the way, would now be down 30%, 35% from there. But you get my point. That's the danger we're in.
People forget the chorus is that, this is the greatest company of all time. These voices are extraordinarily loud. Were the same voices when this was a $108 stock that all universally said, oh, my God, this is yesterday's news, companies, blah, blah, blah. And I also say this because I like playing numbers games. Nvidia added $200 billion, as Danny said earlier, $200 billion of market cap to the company. There are 45 companies globally that have a market cap of $200 billion. Think about that. So, I mean, that market cap ad just put them in the top 50. It's really remarkable when you think about it. The ad is bigger than Cisco, the company. I mean, it's
Here's a danger,
hard
guy.
to wrap your head around.
I know we keep talking about it because I think it's a symbol for kind of the culmination of everything that's happened. Again, good companies, fine. It just reinforced, people's. I knew it. If you're a retail broker and you had your clients in it, you knew it. They're not selling now. It's going to take a lot for them to sell. But who's the incremental buyer? To your point, Guy, at these prices, I just mentioned that. Yeah, certain funds are going to have to rotate and pick a name because they've missed out on. Who is the incremental buyer here at these levels at this valuation? It is what it is, and I wish we could talk about other things. We can, but this is what's most important right now because it's been such a focal point, and it's representing this sector that is green shoots, right? And it's great. AI, as a growth sector, I think it's great, and you have real companies that are backing it, and real companies, the Microsofts and the Googles of the world that are actually doing it.
I mean, that's
it is, but
it
is, but it's a secular play within technology.
Right.
That's all.
But that's what technology is. There's new technologies that bubble up. They disrupt old technologies. The actual players that benefit it, if you want to call them a sector, they're very shallow. But the way technology is dispersed along these different platform companies and then work themselves into other industries, that's the trade. And I get it, but I'll just tell you this. I mean, we're far away from realizing that in EPS terms. All right, well, listen, I think we kind of beat that horse to death.
No, but it was a good conversation, as you would say. It's great seeing both of you IRL.
By the way, beat that horse. So, I gave my Preakness pick last week, and I don't like 5-2, 2-1 horses. My horse.
You don't play chalk.
No. Came in, he ended up going off at 4-1, but lost by literally half a nose. But it did pay. So I said, win, play, show. It returned $5 to place and $2.80 to show. Because you came at me on the Derby.
I did not come at you.
Wait till the Belmont. I'm going to nail this thing.
I did not come at you.
I'm going to nail this thing.
How many? Okay, we don't know the answer. Given what just transpired,
could be 4 horses.
I was going to just say.
I don't even know.
I think there might be 5 horses in the Belmont.
Right. No one likes to run 1.5 miles if you don't have
nor
to.
do I.
Right.
Nor do these horses, apparently. I texted Bob Baffert, by the way, after
he was on our show to congratulate him.
I know he was on our show, which is why I texted him.
Yeah.
I said it was, listen, I know an emotional day for you.
Right.
Because he lost a horse earlier in that meet.
By the way, Jack Wolf owned a piece of that horse. Starlight Racing owned a piece of that.
I saw
the group
those.
that owned it,
They were
Saul
all
Cumin.
they were
Saul
like
Cumin,
dancing around.
Former SAC guy, right? Yeah. I believe Saul owned a piece. They were called the Avengers. So it was a lot of owners that ended up buying a piece of that
Avengers?
thing. The Avengers. Yeah, they own that thing. So
that's pretty lame, by the way. They may want to think about another name.
Exactly.
When we come back, our conversation with Cameron Dawson, CIO of New Edge Wealth.